Look, thanks very much, Ian, and thanks for talking about the future generation companies, FGX and FGG, and you heard from Bill then, and very generously, Alliston is one of the FGG fund managers, so they manage some of that money pro bono, and Patrick from Firetrail, who you heard from earlier, he's given us some capacity for FGX. So, personally, I'd like to thank them because it is making a significant difference. So, but in terms of why am I here, probably you could, blame my father, and I suppose my mother as well. But when I was 15, I remember I'd come home from school and Dad, he was a doctor, I was brought up in Melbourne, and sometime when he eventually got home, at some point in time he'd sit down in a chair and he'd sit there and he'd be reading the paper. And one thing that blew me away is he spent so much time on one page. And I remember saying to him, what is that? And all I knew, as a 15-year-old, I had a whole lot of numbers, all through the page. And he said, that's the stock market. And then he let me have a look at it. And I looked down the list and I thought I'd find one I could afford. And I found this company called Cox Brothers. And it was a department store retailer in Melbourne, very successful a lot of years ago, similar to Mark Foy's up here. And it was trading at 1 cent. And then I remember a little while later I looked at it and it was half a cent. And in those days, that's how they moved. They moved in half-cent units. And then another time it went back to 1 cent. And I thought, geez, if I'd bought the shares at half a cent and had gone to a cent, I would have made 100% of my money. I could work that out. And then I remember a few months later looking down the list and I couldn't find it. And I said, Dad, where's it gone? And he said, look, son, come with me. So he took me into his office, he had an office, and he got this little box, or big box out, and he said, see all these papers here? And he said, they're share certificates. And he said, they're all worthless. And he said, that's what's happened to Cox Brothers. So then, I suppose I didn't pay attention to the market for a little while. And then when I was about, I think 17 or 18, it was the late 70s, early 90s, and Malcolm Fraser was in power. And remember, we were going to have a resource boom then. We never did then, but we were going to have one. And I remember looking for a company that was cheap, trying to do the same thing, but all the share prices had gone up. And the cheapest I could find was a company called Timor Oil and Gas. I was trading at 10 cents. And I said to Dad, hey, look, can I buy some of these? I could probably afford one. And he said, look, I'll lend you some money to buy some. So he lent me $1,000 and I bought them at 10 cents, had no idea what they did. They were just the cheapest one. And they went to over 30 cents. I sold half, I think, at 32. And then they went a little higher and I sold the other half. I subsequently found out later that they were actually drilling for oil. They didn't find any. But I suppose that's what sort of got me addicted. So that's what got me addicted to the market. But why am I specifically here talking about listed investment companies? And the reason I'm here is because about 25 years ago, I read this research from Morgan Stanley in the US that talked about the listed investment company being a closed-end fund versus the mutual funds or the open-ended funds like the BTs, the AMPs, the Colonial First State funds. And what it showed is over a 50-year period, those listed investment companies outperformed those other funds by between 1.5% and 2% per annum over that period of time. And to me, that is significant outperformance. And then when 20 years ago, when I decided to set up my funds management business, and I thought, look, I just manage my own money with some other people's money, then I could be perceived as an institution and get the free kick the institutions get, with information and being able to buy stocks through placements and IPOs, etc. The structure I decided, why don't I do listed investment companies? Because A, they give you a competitive advantage, but B, Like, to me, this is one of the, everyone says, oh, this is a negative about listed investment companies. To me, this is the holy grail of listed investment companies, is you can have $1 of assets that there are times that you can buy that at 80 cents. Now, to me, it's nearly unbelievable. I can manage money and I can buy it, it can be on sale, and I can buy it 20% cheaper than the assets are worth. And at various other times, those assets that can be worth $1 can trade at $1.20. So to me, that is why, they're the two reasons why I'm here. And the second thing is, Ian talked about Wilson Asset Management. What do we do? Yeah.
Do you think you could turn the mic down just a fraction? I'm finding it really loud.
Here we are, boys. Too loud. I can move this down lower if you want. As down as low as you'd like. Now is that better? Perfect. Okay. So what do we do? And now, that's the disclaimer. So can you read that? So you don't sue us. Thank you. We're focused on making a difference, and we try to make a difference in three ways. One is we try to make a difference. We're fund managers, so we try to perform for you in terms of outperform the market. The second thing is, because we've been around for a while and we've been able to make some money, and funds management is a highly profitable business, we're able to give back to the community we operate in, and that's why we have been involved in creating the future generation vehicles, and we do various other things there. And the third thing we do, and this is as we've grown our team, is we can actually stand up for the people that allow us to do what we like doing. And we've got 80,000 odd shareholders, and we stand up for what we believe is right. And just on that, when you came in, if you see Nina Dunn, who's one of our marketing communications executives, you would have seen potentially these little things, which is a signing of a petition. And what we're doing is our 80-odd thousand shareholders, we think about 50 to 60,000 of them are going to be negatively impacted by Labor's, what Labor is proposing is to remove the rebate on franking credits. And the stories I've heard are appalling in terms of, or very sad in terms of how it's going to impact people. Personally, I sat down with my accountant a couple of weeks ago. Luckily, I've been fortunate in life, and I've done reasonably well on the investment side, and I have a decent amount of money in my self-managed super fund, and the impact on Labor's changes to me is zero, which that's the appalling part. And the impact it's going to have to people that have done the right thing for all their life, to me, is appalling. There's a lady, there's a gentleman who rang me a week ago, and he was a Labor voter all his life. He's 68. He worked in the mines, and then when he couldn't work in the mines anymore, he started driving trucks. 3 years ago, he retired because he had medical problems with his back. He was very proud, so he didn't go on the disability pension. Has $650,000 in his super fund. Gets 32 grand a year in dividends, and gets a $10,000 refund, which he lives on. That's gone. We've had nearly 2,000 stories being sent into us. Another lady, 71, single, no dependents. No children. She lives on a fully franked dividend of $23,000 a year. She doesn't qualify for the PBS, so her medical costs are $10,000 a year. She gets a rebate of $8,000, so that's gone. A single mother, late 60s, a similar situation in terms of money to the truck driver. Her refund is, she has one daughter who's dependent on her. Her refund is her rent. What Labor's going on about, taking the money from the rich and giving to the poor is a lie. And please, to me, it's, please, you can get these, actually Nina's out the back there. If anyone wants, to sign this petition on the way up, please do it. We've got 22,000 people have signed it so far. You can go online, you can tell your friends, go on our website, get all your friends to do it. And they're doing, there's a House of Representatives inquiry. Please put submissions in. I've spoken to Tim Wilson, who's running that. We've had 2 meetings with him. We want to hear those, the hardship that people are going to go through because of these changes. So that's the third thing we do in terms of standing up for things we believe in. But just getting back to, that's the team. They're our various listed investment companies. They are, unfortunately, a lot of them are trading at premiums, so you wouldn't be a buyer, you'd be a seller if they're trading at premiums. And you'd like to find some trading at discounts, but WAM Global's at a little bit of a discount, and so is Leaders. So they're the only 2 of all those you'd be interested in buying. The others, you're more likely a seller. Now, to me, I love this quote. Listed investment companies, the first listed investment company was 1868. And why did they create it? I'll read it to you. Investors of moderate means, giving them the same advantages as the large capitalists in diminishing the risk of investing in foreign and colonial government stocks, but spreading the investments over a number of different stocks. And that's what listed investment companies give you, exposure to good managers in a really good structure that can outperform over time. The first one was in 1923 with Whitefield. Where are we with listed investment companies at the moment? We are in a golden period. It really started with the levelling the playing field with FOFA, and it's continuing. In terms of the 3 drivers, FOFA, self-managed super funds, and whatever I said on the other slide, I can't remember what the third one was. If you were paying attention, you would have picked it up. Look at the growth in self-managed super funds, 29%, and that's been a big driver of demand for listed investment companies. Currently, the sector's capped at about $40 billion, and I think it'll continue to grow. Could easily be $100 billion. The benefits of investing in LICs: transparency. You can go and you can smack the board over the head. If they're not performing, you can go along to the AGM. You have the structure, which I talked about, the benefits, and the fact that you can buy $1 of assets below what they're worth and potentially sell $1 of assets at a premium. And one of the other great things about listed investment companies is the company structure allows listed investment companies to give you a growing stream of fully franked dividends over time, which is very important to self-managed super fund investors. When you're looking at a listed investment company, what do I look at? I look at what the pre-tax NTA is, and I would like to buy something at a big discount to that. You also look at what they've delivered in terms of the total shareholder return for an investor. Obviously, you're backing the people, so you've got to believe that they can perform on your behalf. And some of the newer listed investment companies, like, say, WAM Capital, our ability to pay our dividends is a function of what profits we make. Where the older guys, like the AFIC and Argo, they get their dividends in, and the Brickworks and Milton, and then give them out to you. Where we get our dividends in and give them out, but we top it up with profits that we make over the period. So you've got to check to see what the profit reserves of the various listed investment companies are, so their ability to keep paying you dividends. That's incredibly important. In terms of finding information, there's some finding information. Oh, look, that's the petition. We're very passionate about that. I'm pretty sure they will crack because I don't think they don't realise they've had these people sort of work out what the benefits will be, but they haven't fully. They've made significant mistakes in their assessments. Those three examples I just gave you, that truck driver, he could have gone on the pension, he didn't, because he was too proud and he believed he didn't need to do that. He said, now I will go on the pension. The lady with the dependent child wasn't on the pension, but she will go on the pension. So these are unintended consequences. So please get as many people to sign that as possible. Oh look, if you're bored, we're doing our song and dance, our 6 monthly song and dance to our shareholders, because as the investment managers, we understand the shareholders own the company. So we report to them on a 6 monthly basis. That's if you're interested. Now, just before I finish, and with a bit of luck, have I clawed back some time there, Ian? Excellent. Bill was fascinating, his presentation. So I've got a little quiz for you, and this was how much attention were you paying to Bill's presentation? Okay, what is a zettabyte? Can anyone tell me what a zettabyte is? Yes. How many? No. What was that? 1 6 trillion. Correct. So we've got two winners. Unfortunately, the prize is there and there. The prize is I'll buy you a free cup of tea at 1:20 today at the end of lunch for 10 minutes with Nina. So where will we be, Nina? We'll be, I think there's a little room at the back which people are. Nina and I will be there. So if you please come there, we'll buy you a free cup of tea. Look, thank you very much.